Hello everyone. After exam 2, we have two more chapters left, chapter 11 and chapter 8. The reason I pulled chapter 11 before chapter 8 is because the relevant cost approach used in short-time decision-making is quite similar to the way we analyze cost, volume, and profit relationships in chapter 6. For example, if you have a proposal or idea, we would analyze how the proposal or idea will change the related revenue or expense items, the fixed expenses, variable expenses, and how eventually the proposal will impact the net income favorably or unfavorably, so that a decision of acceptance or rejection is rendered. So what are special decision, short-time special decisions? Special short-term decisions are not the decisions about a company's routine or scheduled operations. Short-term decisions normally involve handle a one-time special situation under regular operations, such as replace a node equipment, whether to take a special order, drop a product line, or outsourcing the parts. About these decisions. These decisions are very popular in any type of business operations, so it's very important for us to understand the scenarios and analyze the factors to make right decisions. What are the unique considerations we give to short-time decisions? First, these short-time decisions won't normally involve a significant amount of new capital investment. For example, buying a large amount of equipment or building a new manufacturing facilities. So most of the times, a short-term decision involves the variable revenue and variable expenses only. Like it's saying, okay, normally not all of the situations. So in that case, you will be very careful to analyze whether the fixed expense are affected by this decision or not. So we can focus on only the cost items related to the change and make the final decisions. And the second, because the short-term decisions involve cash flow in a relatively short period, a few months is less than 1 year. So in that case, to simplify the analysis, we'll ignore the time value of money concept. So it means we don't need to discount the future cash flow into the present value, use the interest rate. That will significantly reduce the workload to analyze the situations. So you don't need to discount future cash flow into the current. Okay, we just treat 5,000 revenue after 5 months will be the same as the revenue we are earning at the current time. So in that case, what are the common examples for these short-term decisions? As I just mentioned earlier, we can have add or drop a product, service, or segment. Okay, very popular. So because the companies frequently reorganizing and set priorities of their products or services due to the limited resources, we want to focus on the most profitable or some of the products that's very unique or important to the business. Or accept or reject a special order involving a special pricing, and the special pricing is normally lower than the regular price we charge to customers. Like, for example, your deep discounted airline tickets, right? So $99 tickets or $59 tickets. So with the ground, they can offer these special pricings. Or make or buy decisions, or we can call outsourcing decisions for the company's parts, or maybe services. Okay, so you make the products by yourself, or you outsource to an external company. equipment replacement options, or selecting the priority if you have constrained resources, or they call bottlenecks, constrained resources. And finally, when to sell, what's the best selling point for a joint product. And in this case, so we'll go over each of them in this chapter. So those are the very common short-term decisions. Okay, not only in businesses, it can be in any type of other organizations or even in your personal situations. Before we get on to each of the cases, let's take a look for a recommended approach to make decision-making across different research fields. So not only for business operations, you can use it for making a research in other fields as well. So recommended approach, or you can say the recommended steps, so that will help you really make a clear understanding of the situation you have and move in the right way before you reach the solutions. So first, you need to identify what the problem you are trying to solve. So clarify the decision problem. Like I mentioned, okay, so you should have a title, right? So it's a special pricing decision or replacement of old equipment or outsourcing decisions. So classify the problem and then specify the criteria later. You can make the decisions. I want to maximize the net income or minimize the cost to provide the service or attract more customers to the company. Okay, there are multiple different ways we can evaluate the scenarios. So you must identify your evaluation criteria. And then number 3, identify all of the alternatives to solve the problem. You may have more than 1 or 2 options, okay, to solve the problem. For example, if I want to I need more labor to make products. Okay, I need hire more laborers. So you have the option to hire a part-time job, like, to offer a part-time job, like on hourly basis, or you can hire permanent employees. But it is depending on the situation. So it's better off. So you are better off by hiring if you hire a long-term employee, you will be committed to a long-term payment of payroll and benefits, right? So it's like long-term committed. And for short-term labors, like hourly wages, so it's like more short-time decisions, like short-time payments. So what's the best way, like considering the productivity and the loyalty to the company and the quality of the works, right? So identify all of the alternatives and then develop a decision model. So normally involving which approach I'm trying to solve the problem. For example, I may prepare a contribution margin income statement, right? For the income statement to evaluate the different options. So which one has the best net income? Then collect data. So collect the data, and this is especially the responsibility of managerial accountants, because we offer the managers all of the financial data and the related business operation data for them to tackle the problem. Okay, they have the model, they have the alternatives, but where the data come from, right? Especially like how like the revenues will be in the future and the variable cost, the fixed cost, the classifications, so cost per unit. And the financial data will be the main information they use to analyze the data. And based upon the analysis and the results, we select the best. So the best alternative, the best option, or we optimize the combination. For example, we can go with 2 or 3 options in the same time, like a distribution, like, we want to pick up a product A, B, C as the best combination of the selections. So it can be a single option or a combination of the factors, and then finally evaluate. Evaluation will be probably after you start to execute your plan and generate actual results. So we can compare this to our predictions. Okay, so this is really a recommended approach for any type of decision making. So that's especially when you handle each of the short-term decisions later, trying to use this approach to develop a clear approach, right, rather than being overwhelmed by the data and don't know where I should start with my project.